Welcome back. Well, it's quite stable for equities at this point in time. We are still sub 7600, but we are unchanged from the start of the show when the levels for the Nifty were around 7590 odd. So we're still stable at those levels. But let's get talking on the commodities then. We have Naveen Mathur of Angel Commodities joining in to give us some of his strategies. Naveen, first one on my list is gold, considering the intriguing gain that we've seen. Is it intriguing or not, or do you think that that premium of being a safe haven asset is finally come back for gold?
Good morning, Ekta. The question is pretty right on that whether the gold would continue taking the stance up. I think with the kind of concerns which we have seen over past few days, the China worries, the Middle East worries between Saudi and the Iran, and the question on the global growth because of the China factor. Plus, Ekta, the currency factor also, the dollar index has weakened over a period of time as per the minutes released by the Fed yesterday. So I think the gold has some kind of a positive trend building up. And with the safe haven demand, we may see prices which are hovering at around $1,100 right now to go up till say around $1,115, $1,120 levels. But don't see this particular gains as a continuous trend because the markets are still bearish for gold. All the fundamental reasons, except for these reactions which we have seen over a period of time, just last 2 or 3 days, has been kind of just a question in between. Otherwise, the rally does not look like to be too great or forthcoming in days or months to come. So anyways, for intraday, one can buy the position on the MCX gold for the month of February at around 25,880 levels to 920 levels. Stop loss recommended would be at around 750 levels, and target on the upside can be seen in a range of around 26,100 to 150.
Naveen, hi, morning. So, let's discuss slightly longer term picture of gold. There's so many similarities between what happened in 2008 and what's happening in 2016. And we all talk about 8-year market cycles. Do you think we could be at the maybe start of something similar to what happened in 2008 in terms of the kind of safe haven buying that we could be seeing in gold?
Anuj, I don't think so that would be the case. Now, if you are comparing 2008 versus today where we are sitting in, if you remember, the crude was at the highest levels of around, in July 2008, we have seen a level of around $147 for crude. Inflations were high, the inflationary expectations were high because of the crude oil prices moving up. And I think the markets are reacting currently to just the jitters which we are seeing in the Middle East and the Chinese concerns. Now, if you remember in 2014 and 15, particularly in 15, we had gone through with various difficulties with respect to geopolitical tensions, let it be the Middle East like Syria and all. And we had also gone through with kind of sanctions we have seen in the Eastern Europe countries by the Western, particularly Ukraine. The sanctions have been levied by the Western world. So there was the safe haven appeal at that time too, but the gold didn't pick up the market. I think the economy is stable, the global economy is stable. At that particular time, the entire world, right from the east to west, north to south, were in kind of tandem. So the entire world was looking forward for safe haven demand for the assets, and therefore gold came as a limelight. Today, the scenario is slightly different. I think the global economy has somehow stabilized. The Western world, the Eurozone, the US economy is improving. We are not on the downside for the Federal Reserve interest rates. We are actually on the upside on the the interest rates for the Federal Reserve. So I think the economy is moving up. The fundamentals are slightly positive for the global growth, except for these, I think, jitters of China and the Middle East. So I think the scenario is slightly different. And mind you, the crude also is at around $30, $35 versus $140, $145 at that particular point of time. So the scenarios are different, and I think maybe the rally is looking forward to around $1,100, $1,150, but I think the markets does not look like to be largely on the upside.
Okay, let's move to a couple of your other strategies then. Naveen, in the same family is silver. So your strategy on that one?
Silver would go in for a buy position on MCX, means the March contract can be bought in at around 3400 levels or so. Targets would be approximately 34,500, and the stop loss recommended for this trade would be at around 33,700. It's moving in tandem slightly with gold, although the base metal effect would take a clue, would take a stance on the silver too. But then I think as of now for the intraday, would definitely go in for a buy at around 34,100 or so, with the target on the upside at around 34,500.
Okay, let's talk about the currency equation, Naveen. It was very volatile yesterday. I mean, we saw two big moves in opposite direction in the second half yesterday. How would you approach the currency futures?
6 to 67 would be something where we would be holding our views across. Among the emerging markets, India is very well placed. I think we would have all that means we have all that reserves to take care of this headwinds which we are facing. I think there's a $350 billion worth of reserves versus 2013 when we hardly had $290 billion worth of reserves. So I think reserves are playing crucial role. The markets are seeing positive towards India. So I think the rupee does not have too much of a stance on the depreciative note, but 67.50 would be where we would see some kind of fallback coming up on the weakness on the higher side. But I think 66.67 would be where I think the markets should consolidate, should stabilize at. Talking about the intraday, if somebody wants to trade on the currency too, on the rupee dollar equation, I think the buy the dollar or rupee contract at NSE on January month at around 66.75, 66.80 with the target of around 67.10. Maintain a stop loss because of the volatility at around 66.60 levels.
You have a sell on crude?
Yeah, that's right, Ekta. We do have a sell on crude. The oversupply situation, the conflict of Iran and Saudi would actually hinder the prospects of the supply cut, and I think therefore the supply glut would continue raising the concerns on the crude oil, and we are anyway seeing the trends at around $34 levels. People are talking about 20, people have spoken about 20 and less than $20 also, but as of now it's holding back at 34, 35, but still an intraday sell position can be initiated for the Jan contract at around 2280 with a target of around 2220 or 2210, and the stop loss for this trade can be maintained at around 2340 levels.
Okay, and what about copper?
Copper is a sell, February month, China factor again, so sell it across at around 302, 303 levels. Stop loss for this trade would be at around 307, and we would recommend to put the intraday trade target at around 296 to 297 levels.
Okay, fair enough, Naveen. We're going to leave it on that note. Thanks very much for joining in and talking to us. So those are some strategies coming in from the commodity space. For the Nifty, we're okay, but do watch out for the global markets because